Hi again. I'm Andrea Oliver from One Wildlife Advisors, here to talk about investment trends for 2026. The topic I'll address in this video is the value of a diversified portfolio. For the past decade, U.S. stocks dominated global markets, often leaving international equities and other asset classes trailing. But 2025 marked a notable shift, with returns broadening across regions and asset classes. You've probably heard before, which I know you have, that it's important to have a diversified portfolio. But what is a diversified portfolio and why is it valuable? A diversified portfolio is an investment portfolio that consists of a variety of investments, not only from one sector or one country. A diversified portfolio can consist of not only stocks, but also bonds and even real estate and other investments. What are some key reasons for diversification in today's environment? The first reason is global rotation. U.S. stocks have dominated over international stocks for the long run, but in 2025, non-U.S. stocks outperformed U.S. stocks. Having both international and U.S. stocks can provide the chance for your portfolio to benefit over the long term, no matter which stocks are on top. The second reason is inflation and interest rates. Fixed income can provide a stabilizing role. As the Federal Reserve cuts interest rates and inflation stabilizes, higher quality bonds can provide income and help offset stock market volatility during periods of uncertainty, which we have lots of those. The third reason for a diversified portfolio is that it can smooth out portfolio returns. With regular political and economic news impacting the markets, having a diversified portfolio can help to smooth out returns even as particular asset classes fall out of favor. You may have seen a chart like this before. It's called a Callan chart or a quilt chart that show a colored square for a variety of asset classes, ranked by returns with higher returns at the top for the past 12 years. What's most noticeable about this chart is that there doesn't appear to be much of a pattern in terms of which asset classes outperform. In some years, large U.S. stocks are the top performer, represented by the dark gray box, but in other years, 3-month T-bills are the top performer. So what's an investor to do? How can we possibly pick the asset class that will perform best in any given year? That's where a diversified portfolio comes into play. Here's the same chart, but with the diversified portfolio performance shown with the red line. This is a sample 60% equity, 40% bond diversified portfolio. What's interesting to note is that the results over these past 12 years are good, outperforming all but 2 other asset classes on this chart, even though this portfolio has never been one of the top 2 performers in any year shown. What's more interesting is that this portfolio never appears in the bottom 3 rows, meaning it was never one of the bottom 3 performers in the years shown. This indicates that a diversified portfolio can capture more of the upside and less of the downside volatility. And that brings us to our conclusion. These charts reinforce the fundamental principle that diversification matters. While it may be tempting to make portfolio changes based on recent performance or headlines, investors who maintain balance and stay on track with their financial plans are likely to be rewarded. Thanks for watching.